Today I'm going to do a video on internal reconciliation. When I covered creditors in a previous video, I mentioned internal reconciliation and said that I would cover creditors and debtors at the same time. Now when we're talking about internal reconciliation, we're talking about comparing your debtors or creditors control accounts with the debtors or creditors lists because they are supposed to be equal. If you think about it, the debtors control or creditors control shows what everybody owes you or is owed, whereas the debtors and creditors ledger show amounts owed to individuals. So if you add up the amount owed to or by individuals, you should get the same amount as the amount owed by total debtors or to total creditors. So the way you're going to do this is you're going to take your debtors control account balance and your debtors list, and you're going to compare them to identify the differences. So you can see where things are not the same. Once you've done that, you're going to do the reconciliation process, and when you've completed that, the two balances and totals should be equal. In that way, you have reconciled the differences and you've used internal records. The debtors control and debtors list are drawn up by the business. You need to remember as well that when you are correcting errors, if you've got a double entry error, in other words, two accounts are incorrect, then you're going to correct those errors in the general journal. But if there's only one amount that's incorrect, so say for example, one amount was put incorrectly in the debtors ledger, then only that amount's going to be changed and you're not going to do a general journal entry. Right, let's have a look at a worked example. First of all, what's required? The first thing they ask you is how debtors reconciliation improves internal control, and then we're going to do a reconciliation process between the debtors control account balance and the debtors list. Okay, starting off with the first one, you need to remember, as I said previously, you need to be able to detect errors in your books so that the balance in the debtors control account is the same as the total of the debtors list. In that way, you are maintaining good internal control because your balances or totals are actually correct. Alright, let's look at the next thing now, which is where we are given a question to do. Before I actually start going through this, I just want to remind you of a couple of things. If you issue an invoice, it means you've sold on credit, and that's going to increase the amount owed to debtors. Whereas if debtors make an EFT payment or you issue them a credit note when they return stuff, that's going to decrease the amount paid. That's quite important when you're reading through this information, as you'll see as I go further. Alright, so first of all, they give you the debtors control balance and they give you the debtors list. If you were to add up that debtors list now, it's not equal to the debtors control balance. So you're going to start off by filling in the opening balance here, and then for each of your debtors, you would fill in what they owe you. Right, let's move on to the errors. The first one, when a credit note was issued to Omega, this was recorded in his account and the debtors control account as 550 instead of 55. So remember, we talked about a credit note here. So if you read this, it means we decreased his account by 550. We should have only decreased his account by 55, and likewise in the debtors control account. So when you decrease the account by too much, you need to work out the difference, which is 495, and add it back there. And Omega is also incorrect, so you'll add back to Omega over there. The next one, an invoice to Alpha was recorded in the relevant journal at cost price 2,400 and the markup is 50%. So we've undercharged Alpha here, and if it's in the journal, it's going to mean debtors control is also wrong. So we've undercharged by 50% of that 2,400. So you're going to have to add 1,200 to debtors control as well as 1,200 to your debtors list. Okay, the next one. A credit note for 750 issued to Theta was recorded in the debtors journal and posted as such to all ledger accounts. If you issue a credit note, it means he has returned. but you've recorded that in the debtor's journal by mistake. So in other words, you've increased what he owes instead of decreasing what he owes. So this is a case where you have to double the amount to correct the error. So we're going to need to subtract 1,500 from debtor's control as well as 1,500 Rand from Thesa's account. Remember, when you add instead of subtract or subtract instead of add, always double the amount. Okay, the next one. Settlement discount granted to Omega was posted to his account as 30 instead of 300. In this case, it's only his account that's wrong. So you decreased his account by 30, but you were actually supposed to give him 300 Rand discount, which is going to mean you need to minus a further 270 from what he owes us. Okay, the next one. When Beta paid 4,500, discount 250, it was recorded in the journal as 450, discount 25. If that's the case here, you've decreased Beta by 450 and discount 25, but you should have decreased by 4,500, discount 250. If it's in the journal, it's going to mean debtor's control is wrong as well. Excuse me. Alright, so you're going to need to decrease further the difference between the 4,500 and the 450, and also decrease by the 225, which is the difference between the 250 and the 25, and his account is going to need to decrease by the same amounts here. His account is also wrong if it's done incorrectly in the journal. An invoice issued to Omega was posted to the account of Alpha. So if you read this through here, Omega is the person that owes us the money, so we're going to need to add to Omega and take away from the person that we charged by mistake. Now when you were in grade 10 and you did a detailed general journal, I don't know if you can remember, you had debit credit, and then you had debtors control debit credit, and creditors control debit credit. If that's the case, if you were doing the full general journal, under debtors control, you would have put the 1,400 under the debit column for Omega and the credit column for Alpha, which means you need to show it over here. Now, people say, but it just cancels out. Yes, I know that, but they could well award marks here. Because if you don't show this, I don't know whether you left it out because you didn't know what to do, or whether you left it out because you knew it was going to cancel out. So to be safe, show it coming, adding to the one debtor and subtracting from the other, just in case they allocate marks for that. Okay, then the next one. No entry was made in the journal when Theta's account was written off on the last day of the month. So you'll need to look at what Theta's balance is. It comes to 1740, which you're going to decrease to 0. And because there was no entry in the journal, debtors control will also need to go down by 1740. Okay, the bookkeeper forgot to record interest charged in the account of Beta. The general ledger was correct. In other words, nothing is wrong with your debtors control, but Beta owes us 60 Rand interest, so you're going to add here. That's an example of where one thing is wrong only. And then the last one, the debtors journal was overcast by 300. Overcast means too much. So we added too much to debtors control, so we're going to need to minus the 300. No individual debtor was wrong there, it was just debtors control. If you then add up this, you get 19,480, and if you add up that, you also get 19,480. So you can see you've reconciled the differences between your debtors control and your debtors list, making sure you're maintaining good control over your debtors. In a future video, I'm going to go through another important aspect regarding debtors. Just one last thing before I finish. Remember, this could be done exactly the same way if you were dealing with creditors. So you follow the same method if you're dealing with creditors as debtors, but obviously a creditor would be a liability and treated as such, whereas a debtor was an asset and we treated that as such. Okay, that's it for today. Thank you.